Hello and welcome to Owner Operator Incorporation. I'm Heather Dunn, the Digital Marketing Manager here at ATBS, and I would like to thank you for joining us today. Before we get started, I want you to know that you can type in a question to the box on the right-hand side of your screen at any time, and we will answer all of the questions at the end of the webinar. Also, this webinar is being recorded, so if you have to jump off or if you lose connectivity, go to atbsshow.com or teamrunsmart.com to watch the recording at any time. Now, I would like to introduce you to our presenter. His name is Chris Goodsell. He is a lead business consultant here at ATBS, and Chris works with our clients who are incorporated. Thank you for being here today, Chris, and I'll let you take it away.
All right, thank you, Heather. Thank you for everybody for joining us. We're just going to run through some things here. Here's the agenda. As you can see, we're going to go through the basics of incorporation. Going to compare the incorporation options, when you should incorporate, what's going to make best sense for you. Of course, we'll conclude everything at the end. We'll get to as many questions as possible. I'll try to leave plenty of time for questions. And of course, we have some additional resources for you at the end. Incorporation, these are some things that can significantly impact your incorporation or LLC, whatever your needs are, your operations, the costs you have, and of course your taxes as well. And some of you may be aware or have heard about a new law in the state of New York. It's called the New York Fair Play, and it was kind of the first of its kind. It's specific to the transportation industry, requiring independent contractors in the transportation industry to set up an entity. So as we see it a lot of times, some of these states can piggyback or copycat, I guess maybe another word for it, when they see how it's worked out in another state. So this could be something that we see in more and more states as we go along. But right now, that's what's in play in New York. So if it is something in New York, or you're working in New York, living in New York, have a CDL in New York, you should consider checking out that law, or feel free to contact ATBS at that number there that you see on the screen. And then the incorporation impacts, there's a lot of differences that can make a impact in your business. There's the setup, we have the management structure, how that's going to be, and of course the taxes, what the impact of the taxes are going to be. As we go through this, you'll see a lot that we talk about with taxes. You won't see us talking a whole lot about the legal ramifications. We are a tax and accounting services. We may hit on it more of a overall or a broad spectrum, but you'll see as we get towards the end of the presentation, we'll talk a lot more about the taxes. And then here's just a list of the common incorporations or common entities, as you can see there on the screen. Some of these we're going to hit a lot more than others. We will touch base on all of them, but we'll go into a lot more detail in some of them and comparisons of the others. And of course, the sole proprietorship, the first one, that's going to be the most common. A lot of you listening out there probably are a sole proprietorship now or have been when you first started up. So when you first get your truck, become an owner operator, this is a lot of what you're going to see. You're going to be set up as a sole proprietorship. You'll receive a 1099 if you are leased on to a carrier. Some of your advantages, like I said, it's easy. When you start operating as an owner operator, this is what you're going to be, unless you default to be taxed or have your entity set up otherwise. It's expensive, or at least expensive. There's not a lot of cost that goes into setting it up, other than your cost of doing business. It is the least regulated. You're going to be taxed as a sole proprietorship, which means you're going to be paying the income taxes, self-employment tax, which is your Social Security tax, on all of your income. Again, there's no formal setup, and the income taxes, I guess you could say, are simple. That's not always an easy statement when it comes to taxes, but they are the simplest of the entity forms that we're talking about. Disadvantages: no protection personally from the legal liability. So Your home, your truck, it's all combined into one. So that can be a risk if you're in a liable situation getting sued. Your house or your car, your boat, those types of assets that you own personally, could be included into a lawsuit. Partnerships. Now, this is the simple form of partnerships where there's two people involved. Generally, two non-spousal couples would be involved into a partnership, um, and we're talking about a partnership being taxed as a partnership. So this the taxes are going to be kept separately. Each partner would be responsible for their own taxes. Um, there is no formal entity that's set up. It's a general partnership. And of course, a written agreement with a lot of things is going to be the best way to go. And I'll skip down to the bottom one, resolving conflict. You may not plan on that if you get into, let's say, a team driver situation. A lot of clients of ours are excited when they set that up, but keep in mind that there could be conflicts that arise. So having something that's in a written agreement, will save from the issues as far as it come up. So, you have something documented when you first began of how those contact or conflicts will be resolved. And of course, another good thing is how you're going to determine the profit and loss. Write that out. Maybe you're going to split everything down the middle, 50-50. Maybe it's 70-30. However, that's going to be that you want to have that documented. And of course, some advantages to that. You have two individuals involved. You're going to have that extra startup capital. Both of you bring a certain amount together, and again, that goes back to putting that into that documentation. How much capital is each individual bringing to the table? And of course, as many of you know, that's going to help increase the miles that you drive. Obviously, with two individuals in there driving, you're going to increase the miles. It will increase your variable costs, but keep in mind a lot of your fixed costs are going to decrease per mile. Things like a truck payment. In a lot of cases, that truck payment's going to stay the same no matter how many miles you're driving. So you're splitting that up again amongst two individuals. You can have some leases that could change that a little bit with some of the lease agreements and over mileage funds and things like that could have a difference. But a lot of your insurances will stay the same also. So there's definitely some advantages if you get into that team operation. Disadvantages, just like with that sole proprietorship, that legal liability. There's nothing there. There's no legal entity that you've set up like an LLC or a corporation, and each partner is personally responsible and liable for others in that partnership as well. Corporations, as far as the entities go, legal entities, this has been in existence longer than anything else, comparing, LLPs or LLCs. And it is treated as a separate entity. The corporation is separate from the individual shareholders. And of course, you have employees in there, possibly. You may or may not have additional employees other than the shareholders. The shareholders, they can be entitled to the voting rights, a share of the business profits. And a lot of that can be laid out on the corporate bylaws when you're setting that up as far as, who the shareholders are going to be, what the voting rights are, different things like that can be laid out on those corporate bylaws. And then your corporation differences, it's going to vary state laws from state to state, not nearly as much as what we see with the LLC with corporations. And of course, setup costs are going to vary from state to state. You can be looking as low as $50, upwards of $600, and there is a state out there, a possibility of $3,000. So those startup or setup costs can vary quite a bit. And your requirements, a lot of those, we talked about corporate bylaws are required, stock certificates, annual meetings, minutes of those meetings, those can vary. And then you're going to have the assets of the corporation. Those are kept separate from the individual shareholders. and of course the C and S corporation. And we're definitely going to talk more about the differences with the C and S corporation, and that'll be a big part of the presentation, especially with the S corporation. With your C corporation, it is its own entity. It's separate from the shareholders, and the taxes paid on the income after all expenses. So after you deduct all the expenses, whatever that net income on that C corporation is going to be taxed. And it will be taxed at the corporate level. And the driver or it doesn't necessarily have to be only a driver, but anybody doing business for the corporation must receive that reasonable salary. And the corporation, of course, is going to receive a tax deduction. They're going to deduct the salary paid out to the employees of the corporation. But keep in mind, if you're a single shareholder operation, you're going to deduct it out from the corporation. The driver or the employee is going to receive that salary, and that's going to show up on the income taxes. And then, one of the most important things here is have that separate business account. It's critical for a C corporation, especially from a liability standpoint, but it's also a good practice for any type of entity, whether you're a sole proprietorship. Keep the business expenses separate from your personal expenses. Have two different bank accounts. Advantages of C corporation. You've got that personal liability protection, and what that is the individual, the shareholder, may have those assets from a house to a car, cash. Any of that is separate from the corporation. So if the corporation is getting sued, the individual's assets should be protected. I say should be is, again, going back to that separate business account. You need to run this separate from yourself personally. If you need to go buy a set of drive tires, don't purchase that out of your business account. If you need to pay the mortgage, don't pay that out of the business account. That's where you can pierce that veil of protection, and you can lose that liability protection if you ever got into that lawsuit. Disadvantages, and this is a big one with C corporations, and it's a big reason why we would not suggest having that C corporation set up, is the double taxation. You're going to have two layers of taxation on the income. So what it means is if the C corporation produces an income of $50,000, that's going to be taxed at the corporate level. And if it's just one shareholder, or it doesn't matter how many shareholders, but that gets paid out as dividends to the shareholders, now the shareholders have to pay personal income taxes on their individual tax returns. So that income is getting taxed twice, both at the corporate level and the individual level. And that's where you hear that term double taxation. As corporations, some of the differences, as compared, the profit and losses, or the profit and loss, whichever, flows directly to the shareholder's individual tax return. It's not taxed at the corporate level, only at the personal level. Any of that net income that's distributed out from the corporation is paid to the individual shareholders, and it is not subject to the self-employment tax, which is Social Security, Medicare taxes. That distribution, you still have to pay personal income taxes, but it's not subject to the Social Security and Medicare taxes, which is the self-employment tax. And again, you're not paying corporate taxes with an S corporation. So I think a lot of you out there can see right now, C corporation versus an S corporation. C corporation, you're going to get taxed before it ever hits you as an individual. S corporation, that's not the case. It's going to pass through to the individual, and the individual is going to pay the taxes at the personal level. Generally out there, the corporate taxes, I think I heard something here not too long ago, corporate tax rates in the United States are the highest in the world. So if you can avoid paying those corporate taxes, obviously the better for that. And again, that's where you'll find it with the S corporation. Some of this I've kind of jumped ahead and talked about with the not subject to the self-employment taxes. Um, the driver does get set up as an employee. One of the requirements are with an S corporation is you're required to pay yourself a reasonable salary. Um, we suggested ATBS that reasonable salary in this industry for most drivers generally was suggested in that range of $36,000. The IRS does not define a dollar amount for any industry, let alone the transportation industry, for paying a driver. So that 36,000 is a suggestion that that ATBS has as a reasonable salary. There could be situations that that could change that from different drivers out there, but that is an amount that we suggest. The reason for that, again, whatever that net income is. So uh, the salary that is paid to the driver is a deduction, just like your fuel costs, your maintenance costs. So that amount, if you're paying yourself $36,000, whatever that bottom line for that net income of the corporation or the S corporation, will come back to the individual, and it's not subject to the self-employment tax. What the IRS is trying to avoid by stating a reasonable salary is somebody tries to pay themselves $5,000. And so most of that income for that shareholder is going to be in a distribution. And again, that's not subject to Social Security and Medicare taxes. So they set that term reasonable salary so that you pay yourself what's reasonable out there, because on that salary you are paying Social Security and Medicare taxes. You'll see it as FICA, but that's what's included in the FICA on on an individual that receives a salary through payroll. And again, advantages, it does offer the limited liability of the C corporation with the no taxation, or no, excuse me, no double taxation. Um, Disadvantages, if you're not making a high enough income, the cost can exceed the benefits, as you see on that bottom line. And what that means is it's going to cost you a lot more to operate an S corporation, and so you want those or tax savings to be more than what it's going to cost you to set it up. If it's costing you more to set up than what your tax savings are, obviously there's not a lot of advantage that's going to go into it, and it's going to cost you money. So and of course, that first line there under disadvantages, if not operating as a corporation, the individual could be personally responsible. So that again, that goes back to separating everything. Run it as a corporation. Run it separately from your personal income. You don't want to be commingling those, because that can pierce that corporate veil. Limited liability companies, better known out there as LLCs. Um, the benefits are similar to the S corporation, and just to clarify that statement, the benefits from the liability end of it are similar to an S corporation. It is a pass-through entity similar to an S corporation, but it does not offer the same taxing benefits of the S corporation. We're going to touch a little bit on that. There are some abilities for that LLC to be taxed as an S corporation, and we'll touch on that much more later on in the presentation. Some of the advantages, the taxes are the same as a sole proprietorship. It's going to be considered, if you're setting up an LLC with only one member, you're going to be taxed on the Schedule C. You're going to be taxed as a sole proprietorship. You won't have that double taxation. Again, it's a pass-through entity where there's not a separate tax for the LLC. In a lot of cases, it is simpler and more flexible than having a corporation set up. And what that means is with the corporation, you have to have those corporate bylaws, those stock certificates, annual meetings, minutes of those meetings. In a lot of cases, LLCs don't require that. We would, however, suggest setting up a operating agreement with an LLC. That's similar to what we talked about with a general partnership, is having a contract set up or having an outline as far as how that LLC is going to operate. If one of the members leaves the LLC, does the other members have the right to first refusal of their membership or their stock options if they're taxed as an S corporation. So that operating agreement is a good thing. There are a few states out there that do require that operating agreement. And those of you that are in New York that may have to have that LLC set up, that is a requirement with the state of New York. Doesn't have to be filed with them, but they do require the LLC to have an operating agreement to be kept on file. And of course, the last advantage there, the LLC may elect to be taxed as an S corporation. The term S corporation can be a little bit confusing. When you go to set up an LLC or a corporation, you go to the state to set that up. You don't go to the state and set up an S corporation. The S corporation is just a taxing status that may be elect. So if you go set up a LLC at the state or you set up a corporation, you have to file a form with the IRS to be taxed as an S corporation to have those taxing benefits. So if you have an LLC and you elect to be taxed as an S corporation, your legal entity is still an LLC. You're just taking advantage of the tax advantages of the S corporation. Some of the disadvantages, it can change in each state. The LLCs do not have the length of time or that the corporations have. They've not been in existence. There's not the precedent set up that there is with the corporations. They are becoming much more common, so we are seeing that fade away. There's more precedents through the court systems with the LLC, but not as much as what you're going to find with the corporations. It can be expensive to set up those LLCs, similar to the corporation. Those fees can range from $50 up to $600, depending on the state. And there is no significant tax advantages with the LLC. If you set up an LLC and you're a single member, it is going to be a disregarded entity from a tax standpoint, which means you'll be taxed as a sole proprietorship. If there's two members, it will be taxed as a partnership, which just means there's a separate entity return. That entity is not going to pay any difference in taxes. It's going to pass through to the individuals, but you do have to file a separate tax return. The individuals will still pay taxes on the personal level. You won't pay any corporate or entity taxes. One thing to point out too, we're talking about a lot of these taxes from a federal standpoint from the IRS. Each state has different aspects when it comes to LLCs and corporations. Generally, it doesn't apply in all states, but most states will have an annual fee that you have to pay. Some states will have a franchise tax. So there are different taxes that you may pay at the state level. So that can change a little bit from state to state. And limited liability partnership, not really something that we talk about a lot with clients here at ATBS, but we are going to touch on it briefly. Some of the advantages, again, the profits are not taxed directly at the entity level, so it all passes through to the individuals. Disadvantages, similar to the LLC, the LLP is not even as common as the LLC, so you don't have that legal precedence going back as far with the LLPs. Similar setup costs can be expensive, and the documentation and everything that goes into it can be a little bit more extensive compared to an LLC, and probably the biggest disadvantage is that bottom point. The business automatically dissolves if a partner is lost. We talk to a lot of clients here at ATBS. They're excited to get into a partnership or team driving situation with somebody they met. Doesn't matter if it's a family member or somebody that you know, a friend. It doesn't always work out. So keep that in mind, especially with that bottom point. There's two people involved. You can only control one of them, and that's yourself. So you may think everything's going to go fine. That partner decides to take your money and leave. Clean out the bank account. So there could be some issues that go into that team driving situation. So just make sure you have the correct person involved with that. And the LLP may not be the best entity to choose from as far as setting that up. What we're looking at now is to compare the taxes for different types of entities. As you can see across the top, we have sole proprietors, S corporation, and C corporation. And we're just going to do a comparison of uh, uh, those three entities, assuming the net income of $70,000 for all three. As you can see, you drop down to the second line where it says salary. Of course, a sole proprietorship is not required to pay themselves a salary. Still want to keep that separate bank account, and then also, as you receive that salary, move that over from your business account to your personal account, whenever you need money to pay for personal bills. But it does not have to be paid out through payroll. The S corporation and C corporation are different. They do have those requirements. That $36,000 there, that is a salary. That's not contract labor, paying them on a 1099. That's a W-2 that shareholder that's working for the S corporation or C corporation would receive. And again, we're going with that $36,000 that we discussed earlier. Excuse me. And as you can see, the next line down, personal income tax. With the sole proprietorship, you're looking at right around $10,000, and that's going to be similar straight across there as far as that income tax personally. Now, as you can see with the S corporation and C corporation, those taxes are the same. With the C corporation, you can see that asterisk there. That's assuming that the C corporation is distributing all the dividends out. So whatever that income is that the C corporation is, that's assuming that it's all getting distributed to these shareholders. It's not required to be done with a C corporation, but keep in mind you have the retained earnings tax if it does stay in the C corporation. The S corporation, you can see there's no asterisks because it's required to be paid out to the shareholders. Since it's a pass-through entity, it must pass through to the individual shareholders, whatever that net income is. Now, if you skip down the self-employment tax, and we separated the self-employment tax line and the Social Security Medicare tax lines out. And they're similar. It's just one is paid out through wages, one is not. So the self-employment tax on a sole proprietorship, just under $10,000, $9,800. The Social Security and Medicare taxes, as you can see, there's that double asterisk there. And what that is the $5,800 or $5,500. That's the portion that the employer and the employee is responsible for. So we're looking at this as a single shareholder operation, solo truck driver, and with that 58,000, it's coming from the same source. The employer is going to pay it, and the employee is going to pay it. So the corporation would be paying part of it, which in a sole shareholder situation is that employee. So the amount of Social Security Medicare taxes you can see with the S corporation and C corporation, is much less because it's only on that $36,000. That's where that number is derived from, figuring in 15.3% for the Social Security Medicare tax. And as you can see, the next line, second from the bottom, corporate income tax. As you can see, it's only going to apply to the C corporation. Remember, the S corporation is not required to pay any corporate tax. So the C corporation is going to be paying that corporate tax, which in this case, with that range, you're looking at $5,200. And the most important, what we're getting at is down below, is the total taxes due. Sole proprietorship, you're looking at about $20,000 with the total taxes due, and the S corporation is almost $16,000, and again, the C corporation is going to be the highest with those corporate taxes figured in there, almost $21,000. As you can see with that $70,000 range, that's generally where we suggest anybody setting up a S corporation. And as you can see here, we're going to look at the compare sole proprietorship versus S corporation. I'm sure with that last slide, a lot of you are saying, no matter what, I should be setting up an S corporation, and that's not always the case. And so we're going to compare $70,000 versus $40,000 net income and compare it sole proprietorship versus S corporation. And as you can see with the first line salary, either way, you're going to be required to pay $36,000 for the employee. And again, we're looking at this from a solo operation, not a team operation. So I get this comment a lot: if why do I need to pay myself $36,000 if I'm only making $40,000? Well, the question comes up is if you're a company driver working for a carrier, are you going to expect to make less just because that carrier is not making as much money? Again, the answer to that's no, and that goes back to keeping everything separate. You have a corporation set up. The corporation end has to be ran specifically as a corporation. You have to do everything proper as far as having that set up. So just because the corporation is not making as much money, doesn't mean from a general standpoint that you can pay yourself a less than a reasonable salary. So as you look at the second line there, if you're taxed as a sole proprietorship, this is what you're looking at. $70,000, you're going to be looking at that $20,000 that you saw on the last slide. If you're taxed as a sole proprietorship making $40,000, around $9,408. I hope everybody keeps in mind out there that we're talking about taxes, and we're keeping it at the simplest level. Everybody's taxes are going to be different. We're not taking into account everybody that may have a home out there that has mortgage interest that they're able to deduct, maybe charitable contributions. They may have had a high year of medical expenses. So these are going to vary quite a bit when you're taking into account some of the individual situations. But we're trying to compare apples to apples here at 70,000 versus 40,000, not taking into account some of your personal liabilities or personal tax deductions. Now dropping down to the third line, they're taxed as an S corporation. And what you can see there is if you're taxed as the S corporation, you can be looking at taxes of almost $16,000 if you're making $70,000, or if you're making $40,000, almost $9,000 in tax. That sounds great, from any of those standpoints when you're looking at compared to tax as a sole proprietorship. So as you can see that total tax savings with the S corporation, this is just looking at the taxes. You can be saving $4,400 gross tax savings if you're making $70,000, or $418 making $40,000. Again, you're looking at this from what we talked about so far. Both of these make sense, but let's drop it down to the next line. Having an S corporation is not always cheap. If you're going to be operating it properly, that means that you're going to have to pay yourself a payroll. You're receiving a reasonable salary. You need to be issuing yourself a paycheck. And that's with the taxes being withheld, both your federal and state taxes, if that's applicable. You're going to have a corporate tax return that you're going to have to pay for. You have unemployment insurance. You may ask why you need unemployment insurance, but that is a requirement of the state and federal government as you pay in unemployment insurance. Again, you're a corporation that's hired an employee, even though that employee may be you. You are required to pay that unemployment insurance. So again, this is just an average. That can vary from state to state, but you can be looking at around $1,600 in additional costs going from a C corporation to a S corporation. So you got to add that on there. So when you look at that total savings, when you figure in the added costs, makes sense at $70,000. Doesn't make sense at $40,000. you're going to be losing almost $1,200 if your net income is only $40,000 when you add in that additional cost. And generally what we will suggest is, we use that income level of $70,000 suggestion for clients here at ATBS for setting up being taxed as an S corporation. It can vary a little bit. Can it be an advantage for you at $65,000? Yes, it can. I have clients that, $2,700 is not worth the additional work for them, to have that S corporation. And some $1,000 may be worth it, but definitely if you're making $40,000, this is not the right structure for you. And just to conclude here, we've talked a lot about it. ATBS does recommend, if you want to have that LLC set up and being taxed as an S corporation, is to be making that level. So if you're going to be at $70,000 a year or more, yes, ATBS is going to make that suggestion for you as an advantage for you. Now, keep in mind, we're talking about this as a solo operation. If there's some out there that are looking at a team operation, we're going to suggest that you're making $100,000 a year or more. The reason for that is you have two drivers in that truck. Each one need to be paid a reasonable salary. Again, I've had that question come up with, husband and wife team. Well, why would we have to pay both of ourselves a reasonable salary of $36,000? Again, that goes back to operating it as a corporation. If both of you are company drivers working for a carrier, are you going to only expect one of you to receive a salary? I can almost guarantee everybody's answer out there is no. So keep that in mind, that reasonable salary is not only with a team operation is now $72,000, not $36,000. So keep that in mind. If you are a team operation, look for that net income if you're sole proprietorship to be over that $100,000 range. And talking a little bit more with the LLC, why we're going to suggest it being taxed as an S corporation versus setting up a corporation with a state and electing for it to be taxed as an S corporation is the bottom bullet points there. If you have that corporation that you set up with the state, you're going to have the corporate bylaws. You're going to have issue stock certificates, have annual meetings, take minutes of those meetings. So you have a lot more work to do as far as maintaining a corporation that's set up, that's taxed as an S corporation versus an LLC that is taxed as an S corporation. So that would be the recommendation of ATBS. If you're looking to form that entity for tax purposes, would be having that LLC to be taxed as an S corporation. Now, we do have a lot of clients that maybe you're looking for just that liability protection. You may be in that $40,000 range, $50,000 range. You want that liability protection, but it does not make sense for you to be taxed as an S corporation. You can have that LLC set up. You can be a single member LLC, which means it's going to be disregarded for tax purposes, and you can still have that liability protection. Keep in mind, just it gets into some of that legal aspect that you want to discuss with an attorney, when it comes into the liability protection. But keep in mind, keep that separate. You set up an LLC, it's just not set it up and forget it. I'm protected. No, you got to keep that separate. Keep that bank account for the LLC, and not be commingling the funds personally as well. Going to turn it over to questions here. Heather's going to look up some of the questions that have been submitted. We'll see if we can get some of those answered for you here. If anybody has any questions now, feel free to submit those.
Looks like the question came up, which state is best to incorporate in?
This question came from Gary. What we recommend is you set up the LLC or corporation in your home state. We hear from a lot of clients, Delaware is a popular one, Nevada is a popular one, and let's say you live in a state other than that. What's going to happen is if you set it up in, let's say, Nevada, keep in mind, as long as it's, if you're going with an LLC or an LLC tax as an S corporation, I'm not going to speak too much about a C corporation here because that's just going to cost you more money. We wouldn't recommend that in the first place. If you set it up in Nevada, what you're going to be required to do is to then set up a foreign entity back in your home state. In most cases, that's going to be required by your home state. They may see that you have an entity set up somewhere else, and your place of business or your office, which in a lot of cases is probably going to be your home because you're out on the road. And they're going to be looking for the revenue, whether it's an annual fee or possibly franchise tax back in that state. So not only you're going to be setting it up in Nevada, you're going to be setting it up back in your home state as a foreign entity. So you're going to be paying fees to both states as far as getting those set up. The other thing is you have to have a registered agent. You would have to know somebody in Nevada to be the registered agent, or there's services out there that may cost you $150 a year to be a registered agent. And the biggest thing is it's not saving you on taxes. Um, it's misleading as far as the taxes. Yes, Nevada does not have a state tax. Keep in mind, these are going to be pass-through entities. They're going to pass through the individual shareholders, and you're going to file taxes in the state that you live in, which is going to be back in your home state. So you're not going to be filing taxes in Nevada. So answer your question is best to set it up in your home state.
Are there any special pitfalls to incorporating in Nevada? I think we've covered that one. What is your opinion on setting up foreign LLCs?
It's just my opinion is do it if it's required. Most states are going to require it. As you can see up here on the screen here, we have the state of New York. When you file an LLC in the state of New York, they communicate that with the Department of Revenue. It's actually the Department of Taxation, and they send you out a form to fill out. They want to know who you are, what business you're in, what's your EIN number. So they're tracking you. They know what you're, what you're doing. That if there's going to be taxes that you have to pay, you're going to have to pay it there. But as far as that foreign entity goes, if that state's requiring it, some states may have a reciprocity agreement with others where you may not have to file that foreign entity in that state. But in most cases, that's probably going to be a requirement. A lot of these states are hurting for revenue, and that's one of the ways that they can capture that revenue if they know that you're living in that state, but you have that LLC in another state. You could be required to pay more taxes. Some of these more popular states like Nevada, Delaware, they're onto that too, that people want to set it up. A lot of those states may have better laws, from a legal standpoint, but they're going to have a tax or a higher annual fee to take that. So definitely, if you have if you need to set up a foreign LLC, I would definitely suggest doing it.
Another question we have is money is super tight at the moment. Can I handle it on my own, or should I bite the bullet and use a service like LegalZoom?
I guess it depends on your expertise in some of that. The paperwork has to be filled out. You have to set up an EIN number. If you're confident as far as filling that out, it's something that you can do. If you have experts, we do LLC and corporation filings here at ATBS. We've done hundreds of these, and we work with definitely the lower 48 states as far as establishing these entities. So just kind of depends on your comfort level, and if you know what you're doing. One thing that I can tell you is if you contact the state, usually you're not going to get much assistance. They're going to suggest that you speak with somebody that is an expert in that, as far as filling out the paperwork, or so a lot of the states can be filed online, and how to go through that and fill out that information. So it's hard to answer that question without knowing what the expertise level is on that.
This question is, he started an LLC in Florida back in 2009, but have pretty much ignored it. Can it still be used?
Yeah, in most cases, what you're doing is not setting up or not filing your annual report and paying your annual fees. So there may be something in the state. I don't know specifically right off the top of my head with Florida, but you probably have a reinstatement fee and then have to pay the annual fees that you've had since 2009.
Is it a benefit to lease a car under your LLC?
Keep in mind, it could be. Keep in mind the tax benefits of using a vehicle for your business. You have two options. One is you can take the mileage deduction, or you can take the actual expenses. Again, the actual expenses are the percentage that you're using it for the business. The big disadvantage you can be looking at that is when it comes to liability. If that's a personal car that maybe your spouse is using at home, your kids, maybe it's a nice new pickup truck that you bought. If your LLC is getting sued, that is now an asset of the LLC and you could be losing it. So my suggestion would be is keep that personal vehicle. You can use it for the business, just take it as a mileage deduction.
Can ATBS set up an incorporation?
Yes, definitely we do that. There are some carriers out there that have required corporations to be set up. So whether it's a corporation or an LLC, yes, definitely ATBS can set that up for you.
Does it help your Social Security benefits if you are an LLC under the age of 66?
It's not going to have any adverse effect. You're still taxed as a sole proprietorship. Keep in mind with that LLC, that entire income is going to be you're going to be taxed on your Medicare and Social Security taxes. So it's not going to have any adverse benefits or adverse uh, benefits, I guess, at all.
I have my business expenses separate from my personal expenses, but my bank account is a personal account, not a business account. Is that okay?
Um, I guess it depends. If it's a sole proprietorship, that would be fine. You're not having any liability protection with a sole proprietorship as well. And your advantage with that, with the personal account, is obviously most banks have free personal checking. If it is an LLC or corporation, definitely have a business bank account. Set that up because you're going to be setting that account up. The bank is going to ask you for the articles of organization or articles of incorporation, and also the EIN number. Where your personal account is going to be under your Social Security number. So definitely, if you have an LLC or corporation, have that business account.
If I live in California and set up a Delaware LLC, I recognize I will still need to pay income taxes in California. But are you saying I will need to pay state annual fees in both Delaware and California?
That is correct. Yes. So you're going to have to pay both the annual fees and both the setup fees in the state of Delaware, also in the state of California as well, and not to mention the state of Delaware. Unless you know somebody there that can be a registered agent, you need to have a service. Again, you may be looking at $150 a year for that as well.
Would a state trust give me the same liability protection as a LLC?
That one I can't really speak on as far as the having the estate trust on that. That one may be more to look at and discuss with an attorney.
Okay, well, I think that's all of the questions that we had. So thank you so much. Those were really amazing questions. We appreciate all of that. Again, if you have another question, you can call us here at ATBS at 866 920 2827. And Chris is here, so you can speak with him as well. And we do have a few additional resources. If you want to go to the ATBS website, it's atbsshow.com, and then go to our landing page that's /incorporate. There's additional information there that can help you, as well as if you go to the Team Run Smart website, go to teamrunsmart.com and /calculator, and you can figure out if your income level would be great for an incorporation. And there's also an ebook and additional articles in the Business Smart section on teamrunsmart.com. So thanks again for attending, and we appreciate it. Thank you, Chris.
Thank you, everyone.